Live on WFLA Now, welcome to Climate Classroom. With a specialized degree in climate, he's pioneering the way we look at climate and extreme weather. Here's Chief Meteorologist and Climate Specialist Jeff Berardelli.
All right, welcome everybody to this week's Climate Classroom. The aim of this show is to educate our audience on all things climate and discuss the biggest climate topics of the moment. Now, this show streams live on WFLA.com and WFLA's Facebook page. And after the show, it is also available on YouTube, Apple Podcasts, and Spotify. Now, today's main topic, the insurance dilemma. This week, State Farm announced it's not issuing any new homeowners policies in California. Here in Florida, companies are pulling out. Rates are skyrocketing. We have escalating extreme weather, fires in California, hurricanes here in the state of Florida, and soaring construction costs. They are a big reason. We'll discuss this with a climate expert from a global reinsurance broker and also answer your questions. But first, it's time for your climate headlines of the week. In a world of alarming climate studies, this one takes the prize. New research shows the deep ocean circulation in the Australian Antarctic is slowed by 30% in just the past 3 decades. Warming water is melting ice, and that's throwing off the ocean's rhythm, throwing it off kilter. Why does this matter? The ocean conveyor belt is the main driving force of our global climate. It regulates our climate, so it's a big deal. In climate law news, the U.S. Supreme Court has curbed EPA's ability to protect half of the nation's wetlands. That right was given to the EPA by Congress 50 years ago through the Clean Water Act, but last week, the court reinterpreted the term wetland to encompass only wetlands that directly attach to rivers, lakes, and other bodies of water. This may open up previously protected areas to development and weaken natural storm barriers. Both big concerns for Florida, which has the most wetlands of any state in the contiguous U.S. And lastly, the Pope has some very strong words on climate change, saying that the world must end, quote, its senseless war against creation, and said, quote, the unrestrained burning of fossil fuels and destruction of forests are pushing temperatures higher and leading to massive droughts, adding, it is absurd to permit the continued exploration and expansion of fossil fuel infrastructure. He urged his followers to care for God's creation. All right, to discuss these headlines, I want to bring in my co-host for today and my great friend, Katherine Niemczyk. Katherine and I have worked together as a team in the climate space for several years now. She's here to keep me in check, make sure I don't go off the rails. I should tell you, Katherine's a good friend, and we talk at least a few times a week. Katherine, it's a big responsibility to keep me in check. Are you up to the task?
Well, I sure hope so. Thank you for having me.
All right, we're going to test you. I'm going to test you big time today, okay?
Okay.
All right.
Taking notes.
My other guest today is Steve Bowen. He is the Chief Science Officer at Gallagher Re, a global reinsurance broker. Steve is an expert on climate, extreme weather, and insurance. He used to be a meteorologist right here in Tampa. Welcome, Steve.
Thanks for having me back.
Yeah. Yep, I'm glad you're here. This is an important topic. Listen, insurance in Florida is becoming a tremendous problem and a tremendous issue. I'm going to have you weigh in. We're going to ask viewers to type on their Facebook pages questions for Steve. Steve will answer them for you. And I suspect and I hope that by the end of this program, we will have solved the insurance dilemma here in Florida.
I will have earned a raise if that's the case, but I'll definitely do my best to answer. It's a very complex problem, and if it makes anybody feel better, this is not just a Florida issue. This is a problem that's taking on much more relevance across the United States, as you mentioned, in California recently, but also internationally as well. This is a definite challenge that's becoming more and more complicated by the day.
We feel it for sure here in the state of Florida. Okay, so before we dig into the main topic, I just want to take a minute or two to talk about these big headlines this week. We've had some big ones.
Yeah, the first one's really interesting, the ocean slowdown. I was wondering if you could explain the relationship between the temperature of the ocean and climate change in simple language.
Right, okay, yeah. So the oceans are warming. All the oceans are warming, basically. And what's happening down not only in the Antarctic, but also near the North Pole, near Greenland, is that we have a lot of melting ice. And that melting ice is pumping a lot of fresh water into both the Atlantic Ocean and the Antarctic as well. That fresh water is not salty. And because it's not salty, it's not heavy. And because it's not heavy, it's not sinking as fast. And so we're seeing a dramatic slowdown in what we call the overturning circulation. So essentially the vertical component of the ocean currents. So the Great Ocean Conveyor Belt, which connects every part of this Earth together and regulates our climate system, is slowing down. And this is the biggest driving force in our climate system. It not only regulates our climate, it also, in many ways, controls the amount of oxygen and the way it's distributed across the ocean, also nutrients brought up from the deep. So this is not only a climate issue, it's a biosphere issue as well. And I know that Steve can probably, vouch for me here that this is a big deal, seeing the ocean circulation slow down. And by the way, Steve, this is not the end. Climate models are saying they're going to keep slowing down.
Yeah, it could be an acceleration. And to everything you said is exactly right. I agree with it completely. I mean, I think the only thing I can add is that we have to recognize that the oceans basically control the vast majority in terms of our weather patterns. It has significant influence in terms of the type of events that we see, how the jet stream plays out. The atmosphere and the oceans play off each other very, very much. So any slowdown like this could really lead to more atmospheric and oceanic disturbance in terms of the types of weather events that we see and how that translates into physical impacts to life and property as well. So something we definitely need to be paying attention to today and, of course, in the future.
So to transition to the main topic here, Steve, ocean circulation slowing down, that means that more warm water is not being transported towards the poles here in the Atlantic Ocean. That means a buildup of extra hot water in the tropics, and thus one of the problems that we're seeing with the insurance market here in Florida, which is stronger hurricanes, or at least the ability for hurricanes to more easily achieve major hurricane status. So let me ask this question, okay? My dad, I talked to him this morning. They have doubled his insurance. He lives in Wellington. He's not even near the ocean, right? He's 20 miles away, 15 miles away. My mom, she lives in Stewart. She doesn't even live near the water. Her hurricane insurance, her insurance has gone up by 50%. She had to put on a new roof, and they reduced her rate after she did that. But this is not sustainable. I mean, most people in Florida are on fixed incomes. And even if you're not on a fixed income, last year I read that rates went up by about 30%. This year they're forecast to go up 40 to 70%. So let me ask you this. Is this just a one-time correction, Steve, or are we going to see these kinds of rate increases year over year?
Well, it's very tough to say this is going to be permanent. I mean, the state legislature last year had an emergency session where they really tried to address a lot of the core issues that were really driving a lot of these increases over the last couple of years, which, has of course been increased losses. We've seen, an uptick in the number of significant hurricane events that have led to major claims payouts. I also want to comment on the fact that it hasn't necessarily just been hurricanes. They have, of course, dominated the loss, but we're seeing more in the way of severe convective storms, so thunderstorm-related losses, hail, damaging straight-line winds, flooding that is also putting on added pressure from a claims performance standpoint. But what really has been driving the vast majority of the additional strains going on in the industry has been from a litigation standpoint, from claims fraud, something called the assignment of benefits, where basically you're signing away your rights to a third-party assessor that comes in before an official insurance group has a chance to send their people in to do the official assessment. And they basically write a bill, they send a bill to the insurance company that tends to be much more inflated than the damage actually should have been. And that leads to all these inflated loss payouts, puts additional strain on individual insurance companies. By the way, most insurance companies in Florida tend to be smaller insurers because after the sequence of hurricane events in 2004, 2005, most of the major insurance companies pulled out of the Florida market. And so that's when we saw the development of more of these smaller mom and pop type of insurers in connection with what we call citizens insurance, which is run by the state of Florida. And that's the insurer of last resort. So going back to the rate increases specifically, the hope is that once the legislation starts to really take hold, and we're starting to already see a reduction in the number of lawsuits that are coming out of the assignment of benefits, since that has now been banned as a practice in the state of Florida. Mm-hmm. We're hoping that over the next couple of years, now this is assuming that there's not going to be continued active tropical cyclone activity, that we should start to see a slowing down of the rate of increase. But there's a lot of what ifs involved here. But unfortunately, the next couple of years, it's likely still going to be an issue because we're still running into challenges of these smaller insurers are going out of business. It's just not a sustainable model right now. Plus, we also have to recognize that insurance is always trying to price for the risk itself. And as we continue to see more and more of these intense events, and it's likely to occur with climate change and everything that that we have talked about over the last couple of years in terms of what climate risk is going to look like in terms of tropical cyclone, insurance is trying to maintain its own existence.
Mm-hmm.
And a lot of that is dependent on what we call reinsurance. And the reinsurance pricing continues to go up as well. And the amount of capital available that basically insures the insurance companies is becoming more expensive for those companies to access that as well. So when you put all of this together, because of course this is not a simplified issue, it leads to this really challenging environment where unfortunately it has led to some pretty significant rate increases. And my parents live just outside of Tampa as well, and they live 5-10 miles away from the coast, and they're also seeing similar rate increases as well. So, this is certainly personal for me too.
You mentioned reinsurance. I think generally speaking, I at least some people understand it. I'm not sure that all people understand it. Katherine, you had a question for Steve, right, about reinsurance?
Yeah, well, I'm curious if you could explain. I mean, to my knowledge, it's sort of insuring the insurance companies.
Yeah, and that's the best way and simplest way to describe it. It's insurance for an insurance company. Basically, if you have a major event, an insurance company has their portfolio of residential and commercial properties that they're insuring, or automobiles. And basically, reinsurance is there to take away some of that risk. So if a certain threshold is surpassed from a loss perspective, that triggers a reinsurance payout to the insurance company to basically give them protection to be able to stay in business. So this is a model that's been around for a very, very long time, but in its simplified form, yes, reinsurance is insurance for the insurance company.
It's been around for a long time. And that's what we talk about in climate circles a lot, which is we are living in a different world now. Climate is changing the world that we live in. So the models of the past don't necessarily work in the future. I'm curious, who insures the reinsurers? Is that Wall Street based? Is that backed by investments?
There is some of that. It's a really complicated business, right? And there's always going to be the hope that there's going to be new reinsurance capacity coming to the market. So basically, new reinsurers, and a lot of that money is coming from venture capitalist money. It's coming from Wall Street. It's coming from those large organizations that are trying to figure out a way that they can help sustain the insurance market. But of course, that's perhaps the ugly side of the business, is that it, of course, is a for-profit entity. So there is going to, of course, be that unfortunate gray area where some of those investments to do good, because let's not forget that the whole point of insurance is to help people in their time of need. It's a backdrop to always be there to help people. But of course, it can get into a pretty messy cycle.
We know, Steve and Katherine, that there's still a lot of people who deny the existence of climate change. It's not a great percentage. About 90% of people here in Florida know that climate change is happening, but there are a loud minority of people who still don't think that climate change is happening. Yet here we are, it's hitting us in the pockets right now. And I got to tell you, even if you didn't believe that climate change was going to make extreme weather worse in the future, the model we have right now is unsustainable. Just with the amount of extreme weather we're seeing right now, it's unsustainable. Many people will not be able to continue to live here in the state of Florida. So I'd like to know, Steve, because insurance companies are not going to do stuff unless they have to do it. How are insurance companies factoring in a changing climate into their projections and into their rates?
Yeah, that's a great question. I would say right now, that's one of the biggest challenges that the industry is facing, because your standard insurance policy only goes out for the next 365 days. Climate change, of course, is at a much longer time scale. We're talking decadal, centurial impacts. So how do you price in projected changes in weather events and weather behavior within the next 365 days? And that, admittedly is not an easy thing. But what is happening is that over the last couple of decades where losses have continued to go up. And of course, that's not strictly because of event behavior changes. That, of course, is a part of it, but a lot of it is just the way we're building, where we're moving, and how we're actually living is leading to more increased risk of loss. But when you put all of these things together over time, losses are continuing to go up. So what's happening is that insurers, the underwriters, are having to reassess the current risk. And a lot of areas are now becoming, in some cases, too risky for some insurers to feel comfortable to remain in the market. And that is a really, really difficult proposition, because then it puts more strain on insurance companies like Citizens, which are run through the state. And frankly, the state governments are not meant to be an insurance company. So this is all, this has been building for a long time, but over the last couple of years, especially as the rate of inflation has skyrocketed, we've had supply chain issues during COVID-19. We've run into just an explosion in terms of the cost of labor, construction, reconstruction. All of this is adding up to greater losses, and unfortunately, that is coming back to the end consumer as well.
Right. So the insurance companies have to start planning for long-term planning rather than short-term planning, rather than year-long policies. How do we kind of modify the system, right? Okay, we have a bunch of questions that are coming in right now. And Katherine, because I tend to be very loud, and anytime you want to jump into the conversation, please jump into the conversation, okay?
Okay, all right. Thank you.
All right, so the question is from Kathleen. How are people going to pay for this? Boy, that is the not $1 million, not $1 billion, but perhaps, Steve, you can weigh in on this $1 trillion question.
It's a really, really difficult one. And unfortunately, it's going to force some really difficult conversations at the local level, at the federal level, in terms of whether we should continue to allow folks to live in the highest risk areas. And if you do, then unfortunately, that's going to mean, if you want insurance, you're going to have to pay for that risk, unfortunately. Now, what is continuing to build, and we're seeing this not necessarily in the US, but was a big part of what came out of the last, what we call COP27, is something called loss and damage. And so basically, countries that are causing the most CO2 emissions are now agreeing to put into basically a big fund, a big pool of money to help communities. Again, this is mostly for emerging economies, but I'm going to come back and bring it back to here in the US, to basically help pay for the damage that these people are incurring, especially if they're not able to afford insurance, or they can't have the same level of coverage before because it's too expensive, so they end up being underinsured as well. So that is a bigger problem that's happening. So, one thing that is becoming a bigger point of discussion here in the United States on a state-by-state basis is, do states start to build up some type of pool available to help folks that are not able to afford insurance? And this comes back to a bigger, more philosophical, ethical issue in terms of, there's just a lot of folks that tend to be most at risk, have the least means to be able to protect themselves.
Yeah.
So having money available to help these people either pay for insurance, pay for a retrofit of their property, or do the right things to be more, mitigated or adapted against the increased risk that we're facing, hopefully that's going to, help alleviate folks the burden that they're increasingly facing from all of this. But again, there is not one single solution to this issue. And unfortunately, it's only going to become more significant as we move forward, because costs are just simply not going down.
Yeah, so Sharon agrees. She says insurance is out of hand here in Florida. I want to bring Katherine in on this, because, Katherine, this is something that's close, near and dear to your heart. The people that are most vulnerable to climate change are the ones that are really not causing climate change, the poor people. In addition, we're looking at gentrification of communities. So basically, people in the middle class, people that have limited means, can no longer afford to live in the house that they've lived in, and their family, and maybe their parents have lived in for 30, 40, 50, 60 years, and they're being forced out, and the only people who can take that home that can afford the insurance are rich people. So there's a great amount of inequality here.
Yeah, I mean, I was actually I'm curious how this could impact home prices. I should say I'm not a homeowner, but, hopefully in the future I will be. And how is this going to impact home prices in some of these areas?
So I'll bring Steve into this because my initial thought would be, generally speaking, if you can't get insurance or it's hard to get insurance or insurance is very expensive on your home, the home market should go down, right? The prices should go down just simply because I'm not going to buy a house for $1 million if I can't insure it. Maybe I'll buy it for $500,000, and mortgage companies require that you have insurance. So that's my initial thought. Although, Steve, I will say, so far, the Tampa market especially has been very resilient because people want to be here regardless of the risk.
That's true, but I will say there are some emerging cracks in all of this where we are starting to see a reduction in home value prices because insurance prices are going up. And this is, and this is not just with private insurance, but this also gets into flood insurance through the National Flood Insurance Program. And one of the provisions that came out of the legislation that was passed by the state in last year is that if you're going to buy a policy through Citizens, there is going to be a requirement for flood insurance. Now they're phasing it in depending on the value of your home. But the reality is that you're going to have to show proof of flood insurance to be able to get access to that Citizens policy, if that is unfortunately your last opportunity to get insurance. But we are seeing this issue in terms of reduced property values in Louisiana. I mean, they of course had a significant stretch of storms in the last couple of years. We saw it in Texas. We're certainly seeing it in California. So this is a national issue. And Florida, of course, is the epicenter, but we're starting to really see this pick up in other pockets of the country.
The question is, homes have always been some of our biggest investments. Most of the money that people have oftentimes is in their home. Is home ownership, and to Katherine's point, is home ownership, first of all, is it affordable? And second of all, is it really a good investment going forward? In some places, that may not be the case. I don't want to get too deep into that question. Oh, by the way, Steve, I need to ask you about Citizens, because there are a lot of questions about Citizens, right? This may become the norm in every state pretty soon, maybe. But again, you're the expert on it. We have another question coming in, JB says, so let's bring the question up. So far, the questions have been more of angry comments, JB. Let's see about this one. All right, yeah, I'm sure. I'm angry myself. So this question's from Frank. Why should homeowners have to pay for the insurance company's insurance? Steve, what do you say to that?
Well, I mean, it's just the cycle, right? I mean, I think on one of my previous appearances, I used the example of health insurance, right? And if you're going to have a functional health insurance program, you have to have a mixture of money of high risk and low risk premium coming into.
So sick people and healthy people.
Yeah, exactly. So you have to have a mixture of both. So you're not constantly paying out claims only for people that have insurance, only if they are, most in need of that insurance. That's not a sustainable model. So in order to make this work, you have to be getting access to other funds to ensure that there is solvency for the insurance company. And there has to be some level of protection. So if insurance companies didn't have that level of protection, the reality is that most of the insurance companies would go out of business because they simply couldn't afford the volume of claims that are continued to be paid out. So in order for insurance to function as a business, as a result of the increased cost of the claims, they're having to pay much higher prices. And in fact, today, June 1 marked the end of the insurance and reinsurance brokerage period, actually, for the state of Florida, and rates went up another, on average, 30 to 40%.
Wow, and that's going to be passed on to
that will eventually be passed down to the consumer, unfortunately. But this is just the cycle of how the business is in order to remain healthy. So I've used that example of health insurance before because that is applicable when it comes to property insurance in terms of how insurance is able to function as a business and how they need that outside safe capital, that safe money to be able to maintain its own health.
All right. So we have some other comments and apparently tons of comments. So we need to go rapid fire here on these. So, I'm going to ask the questions and then we got to answer the questions quick. Melinda says, I just don't know what I'm going to do. I'm afraid to go a year without. So people are having to choose between keeping the electricity on or keeping insurance on their home, Steve.
Yeah, I mean, I 100% empathize. I mean, this is a significant problem. I mean, this is why, it was heartening to see the state legislature, come into an emergency session in December to try to initiate some reforms to stabilize the market. But unfortunately, we've just seen so many high dollar losses from big storms over the last couple of years it has just led to significant pressure for the industry. And again, there's a lot of outside influences that up to that legislation passing that is really, leading to billions and billions of dollars of legal fees and and litigation that was really tying up the courts and really adding additional costs that insurance companies were having to pay. And unfortunately, we have seen upwards of 10 insurers in the state of Florida just in the last 24 months or so that have gone out of business because they just can't afford to stay in business. So, unfortunately, fewer options means higher prices because the less options means that the prices are going to go up because there are less opportunities for people to get on one of those private insurance policies. And unfortunately, that's going to lead to many more people going on to Citizens. And of course, we're continuing to see tens of thousands of new policies going into Citizens every month.
And Katherine, this is, again, something that you spend a lot of time in your climate circles thinking about is how this disproportionately affects the people that can't afford it, right?
Yeah, I'm thinking about, say I want to take the risk, but in Florida, I mean, it's required, right? You said to have flood insurance, or it will be.
Well, first of all, it's required if you have a mortgage to have insurance. And then on top of that, go ahead, Steve.
Yeah, if you're going to have a Citizens policy, there is a flood insurance requirement that is being phased in over the next couple of years.
So continue.
Yeah, and just to get to that point with, I couldn't even get a mortgage if I don't have proof of insurance.
It's a catch-22, right?
Yeah.
Yeah, I mean, we see this, we see this nationally when it comes to flood insurance. I mean, if you live in a 100-year floodplain, for example, you're not going to get a bank or a mortgage lender to sign off on that unless you have insurance because you're in an area that's been deemed high risk for flooding. We have something similar in California in terms of wildfire risk as well, where banks are increasingly looking at where your home is, where the historical fire activity has been. And that is being priced into insurance as well. So, again, I mean, this is a very complicated, very difficult, topic here that it's going to certainly require more to be done at the federal level as well to try to get a handle on this. Otherwise, rates are just going to continue to increase.
So we have another comment coming in from one of our we'll get back to that in a second, Katherine. I want to show we have a lot of comments. It is really affecting people in the pocketbooks here, and people are very concerned. Fred says insurance rates are ridiculous. We should be getting rates lowered with no claims. And then Dolores says, my rate has skyrocketed without ever having filed a claim. I mean, that's got to be the most frustrating thing in the world, Steve and Katherine. You have insurance. You never use it. You're a good driver or you're a good homeowner, whatever it is. And yet you get essentially getting fined to some degree, having to pay more, maybe supplementing for other people who've incurred damage. It is it's seemingly unfair system. Seemingly.
Yeah, I mean, unfortunately, that's the way the system has been set up for a couple hundred years. That's just how insurance works. Unfortunately, it's all about assessing the risk based on the portfolios that you have. I used the health insurance example again earlier. I mean, you have to have a mixture of folks that are paying premium that don't have the claim to offset and balance those that are in fact filing claims. And unfortunately, if you have a really active and destructive year, that unfortunately is going to lead to much higher loss costs for the insurer, and everybody unfortunately is going to have to feel additional pain. And there's no one that's happy about it. But unfortunately, for this industry to exist, I think all of us can agree you would rather have insurance exist as an option as opposed to not having any option, and you have no insurance, and then you're completely out of pocket for literally every piece of the damage.
So I have a question. I've heard of people trying to figure out if they could just insure the value of the home that is covered by the mortgage. So essentially the bank requires that you carry insurance on your home. You decide, okay, I owe $500,000 to Bank of America. I'm just going to insure my property for $500,000. First of all, can you do that?
Yeah, you can do that. But then that brings into the issue of underinsurance, where if an event happens and you don't have enough insurance, then are you able to cover the cost that isn't insured? I mean, we saw that in California after especially the wildfire in Paradise, where it was an older community, a lot of senior citizens, where they could not afford to pay the price of the premium for the entire value of their contents and their automobile and their home. And so we saw a much larger portion of damage that was not covered by insurance, just because people weren't covered for the entire cost value of their belongings. So
it's risky.
It's certainly an option, but it's taking on more risk.
Yeah, it's risky.
Yes.
Go ahead, Katherine.
So just jumping off of that, are micro policies a thing, like supplemental insurance? I mean, how many insurance policies can you have? Because if you spread it out among different companies, I would think that that would reduce the risk to them, but I don't know if that's something that's done.
There is an example of that. I've seen it more with flood insurance, because with the National Flood Insurance Program, you can only get up to a maximum of $250,000 coverage for your structure, and then another $250,000 maximum for your indoor contents. But you can actually pay to get additional supplemental coverage to insure more of your property if it's actually worth more than what the maximum allowance is. So,
because this is not something the insurance companies are agreeing on, I think Katherine's point is there a way for insurance companies for there to be more than 2 or 3 insurance companies insuring your home without you having to incur more costs, right? We can buy supplemental, but it's just going to cost more. It already is too expensive to buy one insurance policy. So is that a possible solution to this, where we're able to kind of have a bunch of insurance companies insure each property? This way everybody gets hit, but not too hard. I mean, when you add it all together, though, theoretically everybody gets hit hard.
I mean, I guess it's technically possible. I have not personally seen a lot of that, but I mean, it certainly is conceivable. I mean, again, premium rates are definitely, changing a lot. I mean, I will say personally for myself living in Chicago, I mean, we just changed our bundled insurance policy for home and auto because there was just significant difference in the various, company bids. And we haven't filed any claims, never filed a claim before. But
so even the insurance guys having problems with insurance.
Yeah, I mean, I speak to it again. I mean, this is an issue that affects everybody. I mean, I certainly work within the industry. I'm completely empathetic. My parents are going through it. All my friends are going through it. I certainly understand it. I certainly get it. I'm feeling the pain as well. If there was an easy, quick solution, I would like to think that everybody would be jumping all over it. But unfortunately, it's just such a complex issue that involves so many different types of industries. We talked earlier about home value prices. I mean, then it gets into the real estate market. If we're going to start seeing people pulling out of certain areas because it's too costly to insure, or it's too risky to live there or to build, or people just aren't buying those properties anymore.
It may be what needs to happen, Steve, because when that happens, all of a sudden it's smacking everybody in the pocketbook, and at that point, even the wealthy people are saying, hold on a second, we got to fix this problem. And that's kind of what it takes sometimes in state and national politics to get things done. I want to ask a question. I know JB is going to have a question for you. You want to do the viewer question first, JB? JB wants to do the viewer question. Sabrina says, is DeSantis doing anything about this, and what? You know what, Steve, you kind of touched on it a little bit about how the state legislature has done something on this, not in relation to climate change or extreme weather, but more just fraudulent claims. And I know DeSantis did something, I think he might have done something yesterday related to it. But obviously, doing small measures is not going to help. This is a comprehensive solution that needs to be done on a local, state, and federal level, right?
Absolutely, yeah. I mean, there's no question. I mean, this is not just a Florida issue. This is not just a U.S. issue. This is a global issue. I mean, we are not spending nearly enough money in terms of upgrading our infrastructure to be able to withstand this. After a couple of, I guess it was 6 weeks ago, there was that big flood in Fort Lauderdale where they had 20 inches of rain in just a couple of hours. Yeah. I mean, there was an article I read in the AP that one gentleman was interviewed saying, yeah, this is the 6th time in the last 10 years that my house is flooded from a flash flood. I mean, that's not sustainable, right? I mean, I would struggle to live in a property if it's flooded 6 times in 10 years. But that person may not have any other options, right? So, we need to be investing. And I think we need to be changing how we talk about this. It's not spending. I mean, yes, it is spending, but it's investing. And because if for every dollar you spend, depending on the type of peril, you can actually save $5 to $10 for every dollar that's spent. And that's not just saving properties, that's also saving lives. And I think a lot of times we lose sight of that this is not just about protecting our stuff, which is of course really important, but we're losing a lot of lives of people being directly affected by these disasters. And so by spending the money to protect people, I think in the long run, it's not only going to help us economically and saving as risk continues to grow, but it's also going to save lives too. And people are going to feel and be more protected. But,
let me just interject because I'll say to go along with your point, my mom had her insurance raised 50%. She went and put a new roof on and they reduced her insurance back down again. Not to the level it was before, but substantial reduction. But also I will tell you the hard choice my mom made was not to insure any of her valuables. So she's just insuring the structure, but she doesn't have insurance for the valuables. So she was able, because she's on a fixed income. I mean, my mom's retired. So those are the hard things that Floridians are facing, and a lot of them. So I have another question, Steve. Citizens insurance. Okay. So citizens insurance, as we know, is the insurer of last resort. Do we need to increase the size of citizens? And I hate to say the dirty word, do we need to raise taxes in order to fund citizens to the point where we don't have to worry about this insurance? Is there a way to make it a big enough entity so that we don't have to worry about these issues and these insurance rates going up 30, 40, 50% a year?
I mean, I'm not going to sit here and advocate for that, but that is certainly one way to, make more money available to ensure the health of citizens. If you really want the state government to be the primary insurer in the state, I'm not sure if that's a particularly sustainable model, but it certainly is something that could potentially happen. But yeah, I mean, I'm just going to leave it at that.
Yeah, no. I don't want you to wade into controversial waters. I'm just asking. I'm actually curious about it because my thought is, look, the U.S. When you put money in the bank, the U.S. insures it, right? You have $100,000 in the bank. U.S. says if something happens, the bank closes down, they give you that money back. So the U.S. puts gold behind it. Could the U.S. put gold behind your home?
I've never considered that, but it certainly seems
essentially
like
insuring your home just like they insure the money in a bank account.
Yeah. I mean, we certainly have seen other forms of currency being used for unusual things. I'm a big sports guy, and I think of how many athletes are being paid in cryptocurrency. So there are certainly non-traditional ways we could be thinking about some of this stuff. Now the question is volatility. If you're going to be shifting away from the dollar and putting it into gold or crypto or something else,
I didn't really mean it that way. I just meant, can the federal government back our homes like they back the money in our bank accounts? That's what I mean. I use gold as an example. Just because that's what the Fed did traditionally in the past.
Yeah, I mean, they sort of are, right? I mean, in terms of a federally approved mortgage, if you're getting access to money to be able to buy a home, they're already kind of doing that in some respect. But I see the point that you're trying to make.
Listen, I'm a weatherman. I'm a climate scientist. I know nothing about insurance. I'm asking probably stupid questions. So slap me.
I'm a meteorologist too. So
right.
let's yeah.
That's true. But you have a lot more
insurance for 15 years. But yes.
Katherine,
go ahead. Yeah, but I mean, back to Jeff's point about his mom and hurricane proofing your home. Is it worth it? Is that even possible to hurricane proof your home with the strength of these storms?
Yeah, absolutely. Yeah. I mean, you can put the roof, as Jeff mentioned, hurricane shutters absolutely will lead to policy reduction. My parents just put in new glass that is able to withstand wind speeds up to 150 miles an hour. So again, you can't necessarily say you're going to completely eliminate risk, but you can definitely do things to improve the structural integrity of your home. I mean, I will say that anecdotally, there's a reason why the National Hurricane Center in Miami is basically one gigantic concrete bunker, because that facility, it would take a lot to really blow that thing down. But aesthetically, that is not the sexiest looking type of structure that you're going to see, but
I wouldn't live in it.
But to that point, I mean, should we be rethinking how we're building our homes?
Well,
100%.
We are, but Steve, that's one of the problems, right? Because rebuilding homes costs a lot more than it did just 5 years ago.
100% right. But, again, it gets into the short term versus the longer term, risk, the rate of return on that, right? I mean, if you are going to spend a little bit more, and I will say there is a bit of a myth that it is actually not tremendously more expensive to, try to improve the integrity of your home by putting in hurricane clips or putting in a different type of roof. You can actually do things that are relatively
like clipping the roof to the house, right? That's something that people can do for very, very, very cheaply, and it goes a long way.
It does, yeah, and we recommend that not just for single family homes. We've seen, even during Hurricane Ian last year down in Southwest Florida, we saw numerous examples of even mobile homes that had proper straps put in where there was limited damage to even mobile homes. So again, we can never say that your risk is going to be going down to zero, but there are some cheaper ways to actually improve your home's readiness for these storms than you might realize. It's not going to be completely cheap, but it could potentially not be tens of thousands of dollars that you may assume that it might be up front.
All right, 2 more comments, and then we have to let Steve have lunch. If we don't get out of here soon, Steve's not going to be able to eat. So, all right, so this is from Gigi. She says, the people who can control insurance prices have let Floridians down. That's a comment, not a question for anybody, but I think everyone's frustrated at the situation. And then Jude says, why don't the insurance companies cover many in other states that don't suffer catastrophic weather? That would make an excess for others who are impacted. That is from Jude. So again, let me read that again. Why don't the insurance companies cover many in other states that don't suffer catastrophic weather? That would make an excess for others who are impacted. So any last...
Well, that is...
Go ahead. Yeah,
that,
go ahead.
Well, I mean, in terms of that last question, I would say that is partially correct, but you have to remember that there are insurance companies in other parts of the country that are doing similar things that they're doing in Florida, where they're recognize that the risk is too high because other perils are causing significant amounts of loss. I mean, I think most people would be surprised to know that as of June 1st today, we've already seen more than $20 billion of losses from thunderstorms in the US. I mean, that is a big number. And there are a lot of insurance companies in other parts of the Southeast, the Midwest, the Plains, that are having to completely change how they're writing for thunderstorm related risks as well. So we are seeing, of course, Florida plays a significant part of this, but we are seeing, other perils affecting other parts of the country and insurers that may be more regionalized that are also having to, result in higher premium as well. And I mentioned myself, I mean, my premium went up significantly as well this year. And I went and shopped around to get a slightly lower rate somewhere else. So this is actually happening. Florida is certainly ground zero, like I've said repeatedly, but this is being felt nationally and frankly internationally too.
Let's be honest, we like nice stuff as well, right? We have stuff that's just more expensive. We have perhaps good taste, but expensive taste. And when something goes wrong and we have a catastrophe, it's going to cost more. We want better stuff. We're going to have to pay for it, right? And we're starting to see the chickens come home to roost as it pertains to that, the cost of stuff being more, and also as it pertains to climate change. And I will say once again, even if extreme weather weren't to get worse, and every single scientist studying this is it's going to get a lot worse, even if it weren't to, this is an unsustainable model. This is something we need to work on. So any last comments from both of you? Otherwise, we're going to let Steve get some lunch.
That's
No,
what
I'll
I
just,
look for.
yeah, I'll just wrap up again and just say, I'm completely empathetic to what everyone is going through. I have said a couple times, I'm personally going through it. My parents live just outside of Tampa. They're going through this as well. They've seen astronomical rate increases as well, and they do not live on the water. This is a big challenge that there are many people trying to figure out ways to stabilize the market. Right now, everyone is just hoping for a very quiet couple of hurricane seasons, not this year, but in future years as well.
Knocking on wood.
Reforms
It's not wood,
happened.
but I'm knocking.
Yeah, well, hopefully all of these things, we can get a couple of years of a bit of a lull, then we'll start to see a reduction in rates. But unfortunately, I think we're probably looking at another year or two of some pretty difficult conversations when it comes to your premium.
Well, it's good news if we think that perhaps that we could stop the bleeding, and then we can kind of work on longer term solutions. All right, so I'm going to end the show with that. Katherine, unless you have something else to say.
No, thank you so much for having us.
Of course, no, I'm glad to have you. Just lastly, some wisdom here. Climate change is the biggest challenge humanity has ever faced, but I want you to think about this. It is also our biggest opportunity. Think of things in a different way and perhaps lead a better life in the future. I want to thank you, Katherine. I want to thank you, Steve. And I want to thank all of you for joining us. We will see you next week on Climate Classroom. Remember, you can hear this also as a podcast on Spotify, Apple Podcasts as well. You can watch it on YouTube. And of course, the two platforms, WFLA.com or WFLAnow.com, and also on our Facebook page. Thank you so much. We'll see you again soon.
Watch or listen to Climate Classroom on these platforms and find Jeff's latest climate reports on WFLA.com.